Hey everyone! Today, we'll take a look at some live trading. Do a comprehensive analysis of each individual trade, and no matter what time it is for you, it is the right time to put a like to this video. Let's go! Before I start trading, I look for currency pairs with the best payout ratios and add them to favorites, excluding the over-the-counter or OTC ones. Take a quick look at each with a 15-minute time frame to understand what the trends are and find a good opening. This looks to be our first trade of the day. Look at that, no global trends here. But what catches my eye is the RSI. Now, what the RSI does is it measures the average price of an asset over a given period and shows us where the price is substantially different from that average. In this case, it shows us where the market was oversold when trading in a local downtrend. In other words, when the bears were outpacing the trend. And would you look at that? The trend revered here, who would have known? Now the RSI is indicating that the market is overbought while trading in a local uptrend. Here, in particular, the RSI is too high, reflecting that the market is outpacing the trend. Earlier, it bounced when reaching the upper level, but now the bulls went way over the line. Get it? At this point, it's not a question whether the price goes down or not. The question is, when? And while the RSI paints us the picture, it does not give us a timeline. So it does not tell when the trend is going to reverse. Now, we look for a confirmation that the uptrend is over. Looking back at how the currency pair was trading today, we initially saw a strong downtrend, with the price bouncing off of the trend line each time it hit it. Each time the bears pushed it down when it got there. Then comes a long consolidation, with the price staying in a relatively low volatility range, what is called accumulation phase by Wyckoff. What followed was a steep uptrend that then hit the global resistance level. With the back-to-trend strategy, we trade by strong levels, expecting a trend reversal, and the global trend to continue. We already saw the market bounce off this level, and just as we saw it then, we see a falling star pattern forming, indicating a strong level and identifying a trend reversal. That being said, I open a short position expecting the end of the current uptrend. The market can potentially bounce off of the support, so I take that into account, along with the volatility on the lower end. All in all, I go with a 14-minute expiry. Quick recap: a strong sustained downtrend, a weak uptrend, a flatlining market at a high, RSI indicating that it's overbought, and the falling star at the global resistance. Guys, I really love engaging with my audience, and that's why I created a Telegram channel where you can share your feedback and results. And now I'm actively working on a new playlist with videos, each dedicated to a new trading strategy, and each being a standalone video so that you could easily find one that fits you, learn how to use it, and get to trading. Share your favorite strategies and the ones that didn't work for you in the comments below. I'll make a video on them if we get enough. That being said, let's get back to trading. I'll skip the markets, where I didn't make any trades, and get straight to this one. It's trading in a global downtrend, so I'm only considering short positions here. A rapid fall is followed by a quick recovery, followed by another fall to the level where it all started. The volatility went down and the price gradually moved up to this level, where it formed a strong resistance and a head and shoulders reversal patterns. The pattern quickly closes with the price falling by the height of the head. And now comes the interesting part. Right after the pattern completed, the market went back up until it stalled with a strong falling star pattern, meaning that something pushed the price back down. With the second pump strategy, after the first drop and the correction that followed, we expect the market to fall back down. Theoretically, the market can keep going up for some time, since there's nothing to force the price down at the moment. But with the strong resistance right above, indicated by the falling star, there isn't much room for that. Still, I want to account for that possibility, so I set a longer expiry in case it goes up first and goes back down after. A few takeaways from this one. We saw a global downtrend, a pattern that indicated a strong level, a fast drop from that level, a strong resistance right above it, and tall red candlesticks each time the price got there. In the end, the strategy works out, and we got our second trade in profit. And while we were waiting for the expiration, we got a notification. So I quickly switched to another currency pair. A similar view here, a global downtrend with a quick drop. Looking back, we see that for the past 10 hours, the market has been locked in a channel. At the lowest point, the double bottom pattern reverses the trend. After the pattern completion, the market tested the resistance 3 separate times, but couldn't break it, forming a triple top pattern that resulted in a sharp drop. All in all, the market's been fluctuating heavily in the channel, but this level should be a good opening on itself, and we can try to prove it by using Fibonacci retracement lines. We're aiming for the double impulse strategy here, so we stretch the Fibonacci from the start of the first movement to the end of it. After a short correction, the price starts going up again, and I'm expecting it to go up until the Fibonacci 1.6 level, where it should drop back to where we just saw the correction. This is one of my favorite and one of the most consistent trading strategies. I'll talk more about why it works out in my future video about it, so don't forget to subscribe not to miss it. I check the RSI to make sure the market is trading too high, and yes, it is. The strategy usually takes from 3 to 5 candlesticks to complete, and there's a support that the market may encounter. So, I set the expiry to 15 minutes for this one. Let's recap. First and foremost, Fibonacci retracement, a downtrending market, a resistance level with a pattern that is also the upper limit of the channel, and the RSI. All of this combined gets us our third trade that turned us a profit. After those 3, news started hitting the fan, turning the market too volatile to trade, so I decided to wait out the storm and gave it an hour or so to calm down. Made 2 more trades after that, both turning in a loss. A strategic decision to stop trading for the day was then made that let me end it with a decent profit overall. If you enjoyed this video, please give it a thumbs up and let me know if there's something I should go into more detail about my decisions. And as always, stay safe and be in touch.